Hey guys, welcome to Foundersuite's How I Raised It YouTube channel. Today's interview is with Michael Bloch of Pillar. We talk about how Michael got Kleiner Perkins to lead a seed round. We talk about how he used cold email instead of the warm introduction to get his first few angel investors, which is pretty rare and hard to do. And we talked about how he completely pivoted his business when COVID-19 hit. If you like this kind of content, I have a personal favor. Please subscribe and comment below. I greatly appreciate it. Let me know what you like about this and what you want to see more of. Also, you'll notice in the first comment, there's a link. You can register and you'll get an invite to our next Funding Hacks webinar. I guarantee you this will increase your chances of raising capital. So sit back, enjoy, and appreciate any comments you have. Thank you.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Michael Bloch of Pillar coming to us from a cold New York. How's it going?
Doing well. How are you?
Pretty good. Do you have any plans for the upcoming Christmas or holiday season?
Just going to be staying on the couch at the family's place, hanging out with family and trying to not go anywhere. So I guess hopefully sounds like a typical holiday in 2020 for most people.
Yeah, I guess so. It's funny. Saturday Night Live had a skit like 2 weekends ago. The skit was calling your parents to tell them you're not coming this year for Christmas and that they're not invited. I thought it was kind of a funny COVID skit.
It's one way to get out of it.
Right. Good. Very good. Well, let's jump straight to it. What is Pillar?
Sure. So Pillar is a digital vault for your family's most important information, where today families and, moms or dads, they keep all their important medical records, financial accounts, or legal documents in a bunch of silos.
Yep.
People might have things on physical pieces of paper or Dropbox or Google Drive and text messages or emails or just like kind of floating around your head. And what we found is, what happens if your family needs access to this important information? How will they access it? And there's really no good way to do that today. And so what Pillar does is we let families organize 15 years of information in about 15 minutes, where you can just store all your family's important information in a digital vault and share that with your trusted family members. So everybody in your family has access to the important information that they need when they need it.
And yeah, that sounds great. I've got older parents and I totally get it. It's my dad, I shouldn't even say this publicly, but he's got his computer and then he's got the stickies all over that computer with all the passwords to everything.
I think that's a very common story for a lot of people.
Yeah. So how do you get all that data, which is in stickies and a dozen other places, into this digital vault quickly? Because you mentioned 15 minutes.
Yeah.
So, yeah.
Yeah, so what we've done is really just iterate on the product experience a lot and make it super seamless, where you could just snap a picture or even forward an email or just add it free text, like a free note in the product. And we instantly categorize it. So whether it be a driver's license or an emergency contact sheet or like your pet's vaccination record, we know exactly where that goes. And so it really becomes like effortless organization in a way, where instead of if you wanted to put everything in like a Dropbox, you'd have to come up with your own folder hierarchy and make sure everything goes in the right spots. We've done the hard work on the back end to know exactly where something is supposed to go, so that it's just very easy to store and organize and share for the future. It's something that you really never need to think about again. So we like to call it the effortless organization in a way.
And then once you've got all this data in there, does it just sort of sit until a parent passes or something like that, or is there an activity that goes on in between?
Yeah, that's a great question. So something that we're actually in the middle of adding right now is reminders for a lot of your important stuff where if your driver's license is about to expire, or even if like for the emergency contact sheet, if you want to get an update every 6 months to go update that in case there's something that's changed, we built in this whole notification system to really make it as smart as possible so that, again, we're taking the burden off you to have to remember these things and follow up with these things, because Pillar is just this holistic organizational system that will take care of everything on your behalf.
Okay, cool. Is it different? I've heard of, never used one myself, but I've heard of sort of these, vaults for after death. I don't know what the right frame is there. Is this
Sure.
designed to be more of a, I don't know, what's the biggest vision you have here? What did you pitch to investors? Yeah. Or actually, your pitch to investors is different, but go ahead, please.
Yeah, so the larger vision of what we're building is really aiming to be the central hub that a family uses to manage all of their internal affairs. And so we started with this storage aspect and this organization aspect, but eventually we want to really turn it into the operating system that a family uses for everything that's important in their life. And so there's definitely, a couple other companies that have tried this before, but their approach is, one, to always focus on death, which in my opinion is very like morbid and unapproachable thing that most people do not really want to be thinking about. And the second is that for most of those other products, it really feels like a chore, where how they've built it, it's like there's 150 things to do on your list. And let's be honest, most people just end up procrastinating and never actually getting that done. Whereas we've managed to make it a really seamless and simple experience. And so we actually see like incredibly high usage of the product because it's just so simple to do this instead of some of those more outdated or older generation products like that.
Mm-hmm. Interesting. So I guess this is the time to talk about it, but you pivoted to this to maybe talk about the original vision and why pivot. And I think we'll come back to the pivot as it applies to investors, but maybe just talk about the pivot itself.
Yeah, so the original idea for Pillar was quite different from what we're doing today, where, just to give a bit of background, I'm actually originally from the Bay Area. I grew up in Palo Alto. Back in 2015, I joined what used to be a very small startup called DoorDash as one of its first 50 employees and led the California and the New York regions for them for a couple of years. It was an amazing run there, but after a few years there, decided to leave to go to business school over at Stanford, and was there for just about a couple of days or a couple of weeks before my wife was graduating from law school at the same time, and we got that bill for $300,000 worth of student loan debt. And I actually ended up dropping out of business school to start Pillar to help do something about that. And so when we started the company, our product was there to help people get out of student loan debt. And we've raised about $5.5 million led by Kleiner Perkins to do that. And we actually successfully built the largest challenger student loan app in the United States until COVID happened and the government decided to shut down the entire student loan market, where since March of this year, nobody has had to make payments. There's no interest accruing on that debt. And so we kind of saw the writing on the wall and decided to explore something new to have our team work on. And since then, we've raised even more money from our investors, and finding product market fit twice is not an easy thing, but that's kind of what we're up to nowadays. So
there's so much to unpack here, and I obviously do want to get to the fundraising, which is the crux of the show. But how did that decision come about? Because it shut down, and it was going to be shut down for a while, but you, and I'm sure your investors, must have assumed it would come back at some point. I mean, it's kind of, I lump you in the category of like travel and hospitality and stuff like this. Like, it's dead right now, but it's going to resume. So I guess, when did you decide, hey, better to pivot than to wait it out?
Yeah, so it definitely wasn't an easy decision. It's something that we took really seriously because we knew that it would be an unknown of when would things actually restart, but eventually it was inevitable that it would, right? And so we spent the first few months really just kind of game playing everything or wargaming it and thinking through like what are the likely scenarios. And eventually we just came to the conclusion, as the first extension happened, as the second extension on this moratorium happened, that we just realized there was so little ability to control the business in this space, where it would be really exceptionally difficult for anybody to make this work in terms of the time frame that runway allows, or whatever that might look like. And so that's where we went to the drawing board, and we came up with a lot of terrible ideas, but one that really stuck was this idea for Pillar Life. And happy to go into the founding story there and all of that too.
I think a little bit of that would be interesting because, did you do this lean method where you're out really surveying people, or did you just have a good gut feel for this business number two?
It was a bit of both. So we definitely, did our work to verify a lot of the early hypotheses that we had with some of the ideas that really resonated with us. But the idea for Pillar Life also really came from personal experience, where a couple of years ago, my mom was actually diagnosed with a pretty rare autoimmune disease. And as me and my siblings, we started helping out around the house a lot more, we struggled to figure things out, like what is her bank account info so we could pay her bills on time. We had no idea what medication she was taking or where her life insurance policy was kept, if she even had one. And so that's where, our team, this story, a lot of people at our company had experienced this with their own family members and loved ones. And I think we all just really saw the need that this is something that we would use ourselves if the product existed and was good enough to really make this seamless and easy and frictionless.
Makes sense. How much of a weigh-in did your investors have about this? Did you ever have the discussion of, hey, should we give back the money we've raised, go out and start a new company, versus just pivoting, right? Because obviously Kleiner signed up for something else. So how does that work? Maybe the question is really, how does it work if you want to pivot when you're already funded?
Yeah, so that's definitely an option. Honestly, it's not one that we actually considered, where I consider us very fortunate, where we still had a lot of runway in our bank account, and Kleiner and all of our other investors have been incredibly supportive through this transition, where there was actually never any talk of like, should we just give the money back because it wasn't what you signed up for? Like, when we had this idea and pitched it to people, I think everybody really saw the need of what we were building, and our stories also resonated with them because this is something that is just so common in life. And so people were, we did a great job with the student loan side, and what happened with the market happened there. I think our investors were willing to bet on us again to be able to make this business work too.
All right, last question. Then I want to talk about fundraising. Could you revise the student loan? Would you revise the student loan?
How so? Revise?
I'm sorry, revive, not revise. Revive the student loan business. If and when that comes back, could you spin that out into its own company, or is it, no looking back?
Yeah, it's funny. So it's actually something that we considered. And, to be honest, back in June or July, when we came up with the idea for the pivot, we actually, originally, this was just meant to be the plan B in case things on the student loan side did come back. But the more we started working on this, the more we realized it was even better than our original plan A. And so once we kind of had that realization, we said, burn the ships. We're all in on this. And we still have all our own code and everything like that. But we really believe that this is the right business for us.
Very interesting. Cool. Let's talk about raising money. So how much have you guys raised, and over how many rounds?
So we have, just to lay out the whole history, we raised $1.5 million in our pre-seed funding just a couple months after we had the idea for the student loan product. We raised another $4 million on top of that, which we kind of bundled together into our seed round for $5.5 million. And then we've raised an additional $1.5 million since we pivoted the company just a couple of months ago now.
Let's take it chronologically. So maybe talk about raising that pre-seed round. Sounds like you were just an idea at that point, or did you have some proof of concept or some market, development work done?
So back in the early days on the student loan side, we had a small team of people that were just standing up the very first version of the product and really just iterating very messily back then. And me and my co-founder at the time, we were actually paying salaries out of our own savings and our own pockets for the couple of months before we did raise any dollars from angel investors and institutionals. And so, I'd say it was a classic startup story on that front, where we took our savings down to zero, but managed to make it work right when we kind of hit that limit and were able to successfully raise the pre-seed round at that time.
Plus, you had your wife's. Did you
plus
resolve your
the student loan
wife's
debt
loans with?
we still have $250K of debts 3 years in almost at this point. We're still have a long way to go on paying it back.
I've been out of business school for a long time, and I still have a little bit left. But the interest rate's so minor that I'm not motivated. It's the lowest rate. Yeah. It's like under 1% or something. I forget. But
I think back then that was the case, but now, I mean, it's changed a little bit over the past year or two. But when we came out before we refinanced, it was the average was right around 7% for her loans for $300K on a yearly basis. So not insignificant by any means.
That's amazing. Talk about putting together that pre-seed round. What was your approach to that? Was it just talking to investors you had met along the way at DoorDash? I'm sure that opened up a lot of doors for you, no pun intended, but maybe talk about that round.
Yeah, so DoorDash at the time actually was not as well known or as sexy of a company as it is now, especially with the IPO of the last few weeks. And so, my background, I'd say, definitely helped to open doors, but I think there weren't really like introductions that I was able to get, and I really did have to kind of brute force my way into raising the round, where my approach was really just to cold email people. I put together a list of, I think it was almost 300 angel investors and institutional VCs that I thought would be interested in what we were up to. And I did that by just combing through a bunch of other people in the personal finance space and looking at their early angel investors or VCs. And then honestly started guessing people's email addresses and just, barraging them with emails until they responded. And so that tactic worked, and we were able to get some really amazing angel investors as our first ones. And once that happened, then the ball kind of kept rolling, and we were able to actually tap into their networks and stuff. And so that's actually a tactic that I recommend for a lot of the early stage companies that I help out today with just other founders is, start with angel investors, just don't be afraid to go direct. I don't believe in this need for needing warm introductions on stuff. If you have a compelling idea and a compelling story, there's no reason why you can't just go straight to the source and try and make these things happen.
So did your reading between the lines, your first X number of angels literally came from this cold outreach and persistent follow-up approach?
Yeah, so Adam Nash, who I think you said you had on the show earlier, so he was actually our very first angel investor that came on board. And yeah, I just sent him a bunch of cold emails. I think it probably took him like 2 or 3 or 4 times until he responded to me, but we ended up meeting. He was at Greylock as like a venture partner at the time. So we met in their offices in San Francisco. And even then it was still another couple months of us just kind of developing the relationship until he decided to formally come on board.
Anything that worked well in these cold emails? I think cold emails difficult. Were they super personalized, hyper personalized around Adam Nash, that it was clearly a highly targeted email, or any other just nuances to these cold emails that you found worked well?
Yeah, I think hyper personalization, I mean, it's definitely a good thing to have, but I think the core structure that I found to be effective is really just about telling the story about why your company is going to be successful, right? And very similar to a lot of the other content that's out there about how do you make, slide decks and presentations as you're actually like formally pitching the company. I think a cold email should follow a very similar structure where it's like, why are you a person that people should pay attention to? Have you worked at companies that add legitimacy and credibility to you, talking about the size of the market, about any existing traction that you have, about the strength of the team, really that formula for what makes a successful fundraise across the board, I think applies just as well to that cold email to hook people and get them interested in what you're doing.
With these cold, I'm assuming it took, like with Adam, a couple touches or a couple pings before they, started to warm up to you.
Mm-hmm.
What were your follow-up emails like? Was there anything new in them, or was it just, hey, trying to get a time on your calendar, Adam? Or some of these clever gimmicks that people do sometimes?
Yeah. Yeah, for some, I wouldn't say there was any gimmicks. I mean, maybe that works for some people, but
Gimmick
that's
might be the wrong
tends
word, but
not to be my style. Yeah.
yeah.
I'd say honestly, like for some people that definitely took like more of a nurturing to get them on board. And for them, it was about showing project progress, that we were learning quickly, that we were iterating quickly, and really just making progress on the business. And so, every, it's not that I bugged people on like a daily basis, but every month or something, as we actually made progress and we made new hires that came from really great companies and had really great experience, whereas we learned and I unlocked some key insights about the business. That was stuff that as a founder, especially as an inexperienced one, I think just makes you more credible and shows that your velocity and your slope is really high, regardless of where you start. And ultimately, every company is about its people. That's what makes it successful. And so if you could do that, I think there's a great way to kind of make these fundraisers happen.
Very cool. And then once you got, a couple on board, anything you did to kind of leverage those or springboard those into, getting more momentum, the flywheel going even more?
Yeah, so once we got on some of these other folks like Adam, for example, or one of our other angels is Zach Weinberg from Flatiron Health, if you're familiar with him. And so there were some of these key people. Well, once they come on board, they really did help provide introductions to other people and really navigate the landscape over, who is the right person at the right stage, who is actually interested in these sorts of opportunities. And so I'd say the hardest work is definitely getting those first few people buying into your vision, just like anything. But once you get some people to provide that, then it becomes definitely easier over time. And so, I'd even caveat this where in hindsight, at the time there was a lot of rejection, right? When I helped out other founders, I'd say expect 9 out of 10 people are going to say no to you, even with a friendly, warm introduction, right? Like fundraising is not an easy thing. And so I think you really do need to steel yourself for no matter how well you do, there's always a myriad of reasons of why somebody might not want to invest and come on board. And so everybody is a no until they say yes. And just like anything, it takes that, you just got to push through all those no's to make it work at the end.
Definitely. You mentioned starting funnel was 300 or so names. What, any metrics on like what dropped out of the bottom of the funnel in terms of yeses?
To be honest, I actually have not looked and done that math, but I'd say just based off our cap table over time, I'd say 20, like 15 to 20 out of those 300. So again, somewhere around that 10, 20% success rate.
And then I guess talk about getting into the Kleiner deal. Kleiner Perkins led, which round was that?
It was our seed round.
Okay. So what led to getting there? I mean, they're arguably one of the top 3 firms around. So talk about landing them.
Yeah, so Kleiner, I heard about us when we were raising our pre-seed round, actually. And so they actually wrote us a small check at that time, and we started just developing the relationship really from the earliest days. And so as we just continued to make progress, they actually led our seed round before we even formally launched the product to the public, because we had been talking to them for, it was around 6 or 7 months at this point, and I think they were just really bought into our vision and what we were trying to accomplish. And they were actually my top choice. Even with all the other conversations that we were having back then, they were the people that I thought would just be really amazing partners for the long term. And so they ended up preempting our seed round, which was, I will say, a lot easier than the pre-seed one was because of that. And so that one did happen a lot more quickly than I think the first one ever did.
I had another founder on the show last week that also had Kleiner kind of preemptively, a firm called Doppler. I don't know if you know Doppler guys, but Kleiner led their pre-seed round, which I thought was interesting. Kleiner's a large fund, right? So why is Kleiner doing pre-seed rounds?
I feel like it's a pretty common tactic nowadays. I think you see most of the major funds are kind of moving downstream because they recognize that things get a lot more competitive in the later stages. And so, writing those small checks as optionality, it doesn't make too big of a difference from the fund perspective. Yeah. And there is some signaling risk for founders of just, what happens if they come in on the early days and don't end up leading something later on. But overall, if you feel confident about what you're doing, I think the benefits of really developing developing the relationship and both sides getting comfortable with each other there can make a big difference.
Well, and something I think you mentioned on your Twitter account or Twitter tweet storm. Sorry, it's Monday. I'm quite all here. On your tweet storm, you mentioned about it's hard to figure out who really does early stage.
Yeah.
And that I think is very, very confusing because you do have large funds that sometimes dabble a little bit in these early stages. Others don't. So any advice for just really figuring that out? Yeah.
Honestly, it's a really tough problem that I don't think anybody knows for sure about exactly where things sit, right? Even for some of the largest funds, they do occasionally write, the earliest stage checks if you know some people there or you have a relationship with the firm. But I think by and large, what you see is that the larger the fund, the less likely they are to invest at things just at the idea stage. And it's also, again, very dependent on the idea and the team and the space and everything there. But that's where I think once you get some of those key angel investors on board and people that are more familiar with like how to navigate these things, people like that could do a lot to really help guide founders along the right path and make sure they're not wasting their time with places where it's just never going to work out because that's just not, their model.
Any anecdotes from, I guess, post pivot? You said you raised some more money. Now you have a different business model. So do you sort of have a new hunt or new set of investors you start to pull together for that, or a continuation? Yeah.
It's a good question. So we've had a lot of investors in this new space that we've been operating and already come and approach us once they heard about the pivots and what we're doing now. And so, thankfully, like a lot of the people that we brought on board, which at first it was pretty fintech heavy, but I really consider us a consumer product more than anything. And so we really stacked our deck with people that are just amazing, angels from the consumer side of the space. And so there's still a lot of applications to what we're doing now. And I think the network is still there. And so even if the list of target firms might change as we go into our next round of funding slightly, I still think, the vast majority of it is still kind of the same.
Well, great. Any other bits of advice you have for founders kind of starting off this process, or advice for founders considering pivoting, or any tips you would give your younger self if you were doing this all over again? My favorite question I like to ask. Yeah.
I think if I could advise myself on, it's pretty much some of the stuff that we've already talked about and kind of what I tweeted about the other day, which, why we're here now, is I think really just being able to find some of those key mentors and guides that have been through this before and are just, 1 or 2 or 3 years ahead of where the founder is themselves. Folks like that on our cap table have just been absolutely helpful to me in my own journey. And so that's where it's something, I do angel investments now and I try and pay it forward to other founders that are just a little bit behind as well. Just because somebody that's really in the space and in your corner and could be a lot more objective about things, I think could just be a huge value add to anybody to really have, that personal board of advisors of like other founders that have really been in the trenches before on this.
Did you consider going through an accelerator at all? I don't think I saw one on the cap table. I hear a lot of people who went through whatever, fill in the name of your favorite accelerator. Mm-hmm. That's sort of the value they get from that. It sounds like you've a little bit created that outside the constructs of an accelerator.
Yeah, we did not take that approach ourselves, and it's not something we really wanted to do back then. So again, I think it depends on the founder, and that's absolutely the right decision for a lot of people. I'd argue, again, it depends on like what business you're into and, the network that accelerators like YC or Techstars might be able to provide. So again, it depends on each person's experience, I'd say, and it's really, flavor of the month in a way.
Sure. Good. All right. Well, I'll let you get back to it. Any last bits of advice or comments you'd like to share with our audience?
Well, if anybody wants to check out Pillar, they're welcome to go to pillarlife.com and would love any feedback and get some more people using the product. So other than that, if there's anything I could do to be helpful to people in your community and audience too, I'm always available. You can find me on Twitter, michaelxbloch, or michaelxbloch@gmail.com. Always happy to help out some other founders as well.
Awesome. That's great. I love it. And I love how I did not prompt you to say that. but it's an organic thing. You're probably a third of the people who come on this show offer themselves up just like you did in a very gracious, pay it forward, pay it back kind of way. I love it. It's so great. So appreciate you doing
Thank
that.
you. Yeah.
Your target demographic for Pillar, would it be people whose parents are older, like kind of midlife folks with older parents? It's not, or what? You tell me.
Yeah, it's a good question, actually. So what we found is that, to be honest, we found that the product is actually spreading a lot more than we originally thought it would, where the original idea was just for more like millennials that have older parents. What we found is people very quickly started using it for themselves and their partners and their kids and even their pets, which was the most surprising thing. And so honestly, our user base right now is spanning from, it's really anybody that's a head of household, whether you have young kids that are just newborns or you have, adult kids that are already out of the house. It's really just anybody that wants to organize and share their important family information with their loved ones.
Got it. Cool. All right, Michael, thank you so much. Follow Michael on Twitter. He's got some good stuff there. A lot of it's fundraising related. So very good. Appreciate this. We'll catch you after your next round. Stay warm and dry through the holiday season. And
thanks so much, Nathan.
Over now.
I appreciate the time. Have a good one. See ya.
Thanks. Bye.